Today, we are breaking down group life insurance for the national portion of the life insurance exam. Group life insurance is fundamentally different from individual insurance because it covers many people under one single master policy. On your exam, the master policyholder is almost always the employer, a labor union, or a professional association, and the individual employees or members are the ones insured. You must remember that employees do not get the actual policy. Instead, they receive a document known as a certificate of insurance, which outlines their coverage limits and the name of their beneficiary. If you see a question asking who the policy owner is, the answer is the employer. If the question asks who receives the certificate, the answer is the employee. This is a primary distinction that frequently appears in multiple-choice questions. One of the most heavily tested areas involves the distinction between contributory and non-contributory plans. This is where many students lose points on the math. In a non-contributory plan, the employer pays the entire premium and the employee pays nothing. Because the employer is footing the bill, the state requires 100% of eligible employees to participate in the plan. This prevents the employer from only covering the people who are currently sick, which is a concept known as adverse selection. In contrast, a contributory plan is one where the employee pays some or all of the premium through payroll deduction. For these plans, at least 75% of eligible employees must participate. The exam will try to flip these numbers on you, so memorize that non-contributory means 100% participation. A helpful mental shortcut is the phrase, none means all, in a non-contributory plan. Because there is none of the premium paid by the employee, all eligible members must be included. Another critical exam topic is the conversion privilege. If an employee leaves their job, or if the master policy is terminated by the employer, the insured individuals have a legal right to convert their group coverage into an individual policy without having to prove they are healthy. This means no medical exam is required. However, there are 3 strict rules the exam loves to test regarding this process. First, the employee has exactly a 31-day window to make this conversion. Second, the new policy must be a permanent form of insurance, such as whole life, rather than another term insurance policy. Third, the premium for the new individual policy will be calculated based on the insured person's current attained age, which usually makes it significantly more expensive than the previous group rate. If an employee happens to die during that 31-day conversion period, the death benefit is paid out to their beneficiary as if they had already converted, even if they had not yet finished the paperwork or paid the first premium. Underwriting for group insurance is also unique because the insurance company evaluates the group as a single entity rather than evaluating each person's individual medical history. They look at factors like the average age of the workforce, the ratio of men to women, and the inherent risks of the industry. This is why you will see questions about how insurers manage risk in a group setting. By requiring high participation rates, the insurer ensures a healthy mix of high and low risks. If an employee joins the group after the initial enrollment period has already passed, they might be forced to provide evidence of insurability, which is a common trick question on the exam. Most of the time, if they join during the designated eligibility period, no physical exam is needed. This period often follows a probationary period, which is a set amount of time a new employee must work before they can sign up for benefits. Keep in mind that group life is almost always written as annually renewable term insurance, which keeps the costs manageable for the employer while providing essential coverage. Focus on the 31-day conversion rule and the participation percentages to secure these points on test day.